Good day and welcome, guys. I hope you find value in this video. And today I'm just going to be talking about my entry models, how I look at the market, and how I fund my entries. And I will just be doing the weekly breakdown for the first week of November, right? It's obviously NFP week, but at the same time, there's still a long opportunity in the market. There's still big opportunities. And I just want to quickly do that and give you my entry models and just, yeah, so that we fall in line with what is happening within the market. And hopefully that's going to give me a chance to just start posting more and being more connected to you guys and to my YouTube, so that you can actually see whether or not the markets or the analysis that I look at play out or not, right? So this means that if I'm posting this video now, I'm gonna do end of the week breakdown to see and come back to this video to see what happened, or what did not happen, or how did it happen. So in that way, guys, it all works out, it all builds. But for now, I won't say much, but I'm gonna tell you now that subscribe. If you haven't subscribed, tell me how's the market looking. What are you going to be trading for the week? And comment where you're from, like, subscribe, and I'll see you in the charts now. Welcome, guys, and on this video, I am going to be explaining my entry models. Right, I'm going to be talking about two models. One, or even both of them, can be used as a reversal or even continuation models, right? It all depends on the type of market that we're looking at or the point of entry. But based on each model, I will also explain which one is used mostly for reversals and which model do I use for most continuation entries, right? Market conditions do change, but I adapt my entry model towards the current market that is happening. So even if this drawing might be perfect, even if this sketch might be perfect, but we have to adapt to the market. It won't be picture perfect in the market, but as long as it translates into the same language, that's what matters. Okay. Make sure you sit tight, and if you want to, but I would advise you to take a few notes. They might come in handy if you are trying to understand, you know, ICT and some smart money concepts and the entry models, right? So for this model, we have an order block mitigation with a liquidity purge, right? What does that mean? In the market, we have both supply and demand zones, and both of them get mitigated, they get tapped before the market moves in either direction. Okay, and if it's a buy model, look at it as a inverse, put it upside down, right? This is a sell side example, and a buy side would just be the opposite, meaning that this would happen, but we buying instead of selling. Okay, so now with this model, this is a continuation. So looking at this model, I can tell you that within a trend that is already trending, since the market is already trending, it is only optimal to take trades that go in line with the higher time frame order flow, right? So looking at this model, we know that the market makes structural lows. We go from a high, we make a low, we make a lower high and a lower low, right? We break structure. And if we get to a point, or if the market gets to a point where it starts to break its intermediary highs, meaning that if it starts to break its higher lows, we essentially try to look and understand where is price going, right? If the price aligns with the daily bias, we look to see where the market is going. Where is price trying to go? Where is it trying to mitigate? and that forth. Okay, so we know that as the market goes, the market fills in each order block or each fair value gap as there is in the market. If there's no fair value gap, then there is no reason why the market has to go in that direction if it hasn't made the reversal, right? The market wouldn't go beyond this area if there is no order block to fill here, if there's no fair value gap. So it will eventually move lower or go higher if there is liquidity that has been filled or liquidity that needs to be filled out and rebalanced. The reason why I have an entry model, I trade strictly entry models, is to limit over trading and not take trades that do not have a defined success rate. Okay. And now that we know what happens, okay, the market attempts to fill in an order block, right? That's what we would find that the market tries to fill in an order block, but it fails, meaning that we have wicks just below a previous high. We have wicks that are just below the previous high. So we know that the market is over here. We know that this overall bearish trend is still in power. It's still a strong trend. Yet the buyers in the market are trying to reverse, are trying to take liquidity to certain areas that can be optimal for entries, right? We might find that, even this order block or this reversals forms because there is liquidity sitting above these highs that where the market is trying to sell off from, right? We might have sell orders, we might have buy orders that sit here because of the continuing volume in the market that essentially when we wipe out these buyers, we attempt to rebalance price because there's a lot of orders that are sitting here. There's a lot of stop losses, there's a lot of volatility, there's a lot of news, okay, and it's all based on time and price. Those are the two things that I feel like the market is heavily dependent on as the candlesticks form, as the market moves, right? So above a high, we will find liquidity and we can identify that we have a higher time frame point of interest that needs to be mitigated, right? Maybe this over here, we might classify this as a 4-hour zone, right? A 4-hour demand zone. Then from this point, we identify it on a 1 hour or 15-minute, right? So it's on a lower time frame. And on a lower time frame, this high here might seem like it's the true high. But we have to understand what point are we referencing it from, right? We can't be selling in a very bullish market because now this low hasn't been broken, yet this high has been broken. So you might have thought that, we're buying. I might have thought that we're buying, but sometimes that's not the case. But what happens next is that we need confirmations, right? We need confirmations. Even if this high confirms that we are in a bullish trend and the trend has changed, we need to find confirmations that confirm that theory that indeed the market has changed, right? But what happens? The sell-off continues. We break this low, we break the previous low, and we make a lower low. So we know that now, okay, we are not buying. We were just experiencing a complex market, because the market is never ever straightforward. It's never a straight arrow. So we understand that if lows get broken, we are bearish. If highs get broken, we are bullish, right? So we get our confirmation once the market invalidates that intermediary low and breaks that lowest low in the market. So we can confirm that, okay, we are still bearish. So now this is when things get interesting. We have two things, right? Two crucial things or two crucial points that make our criteria very valid. Okay. The two most important, they are that internal liquidity must be present and that the higher time frame zone must seek mitigation, right? We know where the market is going. So if the market sells and then changes and buys, we know where the market is going. It is clear where the market is going because there's a higher time frame zone that needs to be mitigated. we need a time frame zone. We need a higher time frame zone, whether it's a supply or demand zone that needs to be mitigated. So with that case, internal liquidity plays a role in trapping the market. Internal liquidity acts as a fake out, whereas it can be a fake out. But if you understand where price is going, which higher time frame liquidity is it trying to purge, we can understand and be in a good area to place our entry. So I'll place my entry over here, right? If there's internal liquidity, I know that my entry is placed at the high time frame zone that sits above liquidity in a sell model, and a supply zone that sits below internal liquidity in a buy model. I don't need to risk more on this model because I'm not trading against the trend. Okay, my entries are in line with my daily bias. If the daily or the weekly high time frame is trending in a specific direction, I go along with it. This is the latest model that I'm into now. Because of the reversals that have been happening in the market. Well, I've been looking for an optimal way to get in reversals, and I came across this model. It's called the market maker model. So we find internal liquidity and we going into external liquidity, which is previous low or previous or lower fair value gaps. Excuse me. Right. So our criteria means that we must have our higher time frame, premium or demand zone in check. We must always know what the market is doing on the higher time frame, because when we look for entries, it must be in line with the higher time frame. That's going to be first. That's always going to be the first rule that I follow, right? And we need to have a confirmed change in character. So understanding that we have mitigated, we need to identify a change in character, or somehow others classify it as a market structure shift. Those, everybody has their own definitive terms, but for me, it's always going to be a change in character. Okay, we need to find a change in character that indeed we are not just experiencing a pullback, but we do find that the market is indeed changing direction. The fair value gap that we look for, or the imbalance that we look for, is in line with the trend. Now we are looking at the premium zone of the trend. What I mean is that I would take my tool and I would just classify it this way, right? If I'm looking for sales or in a bearish market, right, I only take trades in the premium zone, and in a bearish market, I only take buys inside the discount zone. Why? Because the probability of a sell occurring in this side of the zone can happen, but it doesn't have much probability to it. It cannot be reliable. So that's why I say that we only sell in the premium zone. Selling in the premium zone allows us to know that we are in the best position to risk. Every trade is a risk, but selling in specific places or looking for trades in specific places allows us to be willing to risk and to know that we have a definitive risk appetite. I look for inducement, I look for imbalance, I look for price where liquidity can be taken out from, and then we take it, right? I take it. And it's the same thing as my previous model, okay? I do not need to know where the market is going, okay? If I'm willing to hold, I just hold. But most of the time, I just target the previous low, right? Because we know in a bearish market, the market continues to break lows, right? In a bullish market, we know that the market breaks highs. So it's the same thing. And that's it. I hope you learned something. I hope this can make you understand the market better. It can play a role in your in your analysis and in your setups, in your trades. These are my two models, okay? But for now, I want to look at what the week has in store for us. So let's go that side. What was that? We have fair value that seeks to be mitigated, okay? We have fair value that seeks to be mitigated. We have internal liquidity present. And from this standpoint, it's only fair. Okay, this makes my model and more my anticipation for the coming weeks to be very, very, very probable, right? This makes it a very high probability setup, especially on the daily chart where we're looking at long-term positions. From what you see now is that, what I'm looking forward to is that I'm looking for a market maker reversal, right? We have a low here. This is the 4-hour low. This is last week's low. So this is a very sensitive zone, and we have fair value here. We have the buy side we have the buy side fair value gap, but again, this is the 4-hour chart. It can still be refined even more. But this is the fair value gap that lies on the 4-hour. Okay, and this is the low. So essentially, what I'm anticipating is that we continue moving lower, and we break, giving me or showing me a very, very strong and volatile change in character. So that if we look for a re-entry to a fair value gap, we can use that fair value gap and essentially get a re-entry to the downside. I can further refine my order block to this zone, right? That this is what I'm looking at, and for the market to essentially do the same thing here, to essentially break and let us move lower, so that we can look for a sell side fair value gap that we can look to mitigate. Okay, so first things first, we have a point of interest that is being mitigated. It's also a high time frame fair value gap that has been purged. So same thing. All right, I have an intermediary high over here. We have a low, but as the market was moving, the market had a gap here. This gap here between the candlesticks posed the question that said that the market wouldn't move higher. The market wouldn't seek to move higher without purging this fair value first. Okay, so what happened on Friday was that the market sold off into the area and gave us interesting price action. Okay, so this might be the first trade that I'm looking at for the week. Why? Because now that we have purged this, I can see a supply, or it's a 1-hour supply zone, right? But I wouldn't take it as of yet, because what I'm looking for is to see that the market breaks this high first, confirming that indeed we are in a bullish trend, and then possibly seeking this buy lower and moving, or we can still have the same momentum that breaks above and fills in this fair value gap before I can start looking for longs, because the same thing happened over here again on the Monday open when the just market opened. So it's essentially the same thing. So depending on how the market approaches each area, I will be entering the market accordingly, and from there I will just target this high time frame fair value gap that can possibly be mitigated, and that's it. That's it so far. We have a low that gets broken. We get the market trapped on the sell side, whereas the market just attempting to reverse from its higher time frame structural point, and from there I'm just going to be looking at what is going to be happening on these pairs. Okay, and I'm just going to be keeping it short. Uh, I'm just going to be looking at these two markets so far for the week.